Hi, welcome to the Market Alert for Thursday, the 18th of June 2020. So turbulence ahead, $2 trillion in June options expirations and a massive $76 billion in pension selling on deck. It says here, as we head towards the expiration of these, the next 2 weeks promise to be volatile for stocks, which will also include the indices. So watch for an increase in volatility. Looking at the implied volatility, which of course is related to the options premium and price, we can see this has been in decline. And therefore, again, this is characteristic of, as we saw before, where you get very quiet volatility, as we see down here in this sideways range, particular here as we went through the winter, and then you end up with an explosive move that happens all of the time. So again, now we can see this decline back to where we saw the market take off here back in February when the coronavirus hit. So let's have a look at yesterday. We'll start off with the Dow again. We'll start with the daily chart. And you can see prices looking weakish overnight, and also yesterday Powell spoke. Once again, didn't convince the market of anything, and prices moved lower, back below the 200 bar moving average, but are finding support at the 5 bar moving average at the moment, and also the 20 bar moving average there. And in the main event, you can see it was incredibly choppy at the start of the Dow yesterday. Really choppy. Prices sideways, they were up and down. And this little bar here of 171 points, this was an announcement to say that Texas had seen an 11% increase in COVID, new cases of the COVID virus. And they're sending prices down. And then eventually, guess what we get? We get the usual correction there. You can see how the market also tried to hold at the DP level as well. I kept breaking through, being pulled back, but eventually the 200 bar became a resistance, and then it just got hammered to the downside. But you'll see here prices coming back. I'll just draw in the retracements for you from the low to the high there, and you'll see prices coming back to 78%, and then the market making its way back to where it started at the beginning of the session. If we take the high from the session and just draw this across, I'll just drag this across there, you'll see the market stopping at 89%. And then of course Powell spoke, and the market said, well, we're not impressed. I don't know what he said. Doesn't really matter, but we can see the reaction there. And then overnight prices have moved lower until we see this early hours. We get a bit of sideways and then a retest over to here. We get the green buying bar coming in, as we had the green buying bar stopping the market there. And then prices have moved to the upside there. And this is the same for the German DAX. And we'll start off again with the daily chart. I like to look at the bigger time frames. The DAX again is still showing a bit more strength as it stays above the 200 bar MA, and also the 5 and also the 20 at the moment. But it needs to take out the 78% retracement if prices are to move higher. Very narrow range yesterday for the DAX, which we'll see in just a moment. So again, first thing in the morning, prices stuck in this very choppy sideways range, and you can see all of the green bars here where prices found support as they were moved lower with the red bars. You can see the red selling bars there, and then eventually the buying takes over, and we see prices moving to the upside there before running out of steam, and then we get a retracement before we get a double top, and then following the double top as we went into mid-morning, you see prices coming back there. And in the afternoon, we've got 2 trades of the short there, which only managed a few points out of this one, because the market, even though it looks like the market moved lower, and it did, but we had the green bar there at the scalp level, and also the increase in volume here. So it was a matter of taking just a few points off the table. Interestingly enough though, prices retraced from the high to the low. They came back to 89%, and we've got the resistance there with the psychological level as well, before prices then continue lower. And again, you'll see here, as we had a potential buy signal here, unfortunately it wasn't filled, and again this bar here is the shoot down in prices, as it was announced that Texas had seen that increase in new cases. And then the final trade of the session was this one here. You can see them buying back here as well. They shot the market down, came back again. You can see the volume is very high, and eventually the market actually drove through the 200 MA and the scalp level there. That's the sort of bar you want to see, where it moves higher. Prices traded sideways for a moment or two there for the next 8 minutes, and then eventually managed to move higher before closing back below the 5-bar moving average, which is part of the strategy to exit the trade. Okay, that's a quick roundup of today. Let's see if we get another situation where the market will trade sideways when it kicks off. Yesterday again we had the I forgot to mention this, where prices just moved low, but they didn't drive through again, and you want to see prices drive through the scalp, and you can see there they coming back and then trying to get back, and even subtly there is a small retracement here, but they'd lost all of its momentum. And on the upside here you can see that prices did drive through, but then started to retrace. And again, on this particular trade, it was you could see the weakness coming in, and once it closes below the 5-bar moving average, as it does here, then there's a pretty good chance that this market is going to move back. So the best break even and a few points loss on this trade. But otherwise, a good day considering how choppy it was. Hopefully with the increase in the volatility that we're expecting here, it will be more directional for the market as well, but certainly a bit choppy to say the least, and particularly in the open of the session at the moment. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.